Well, we have with us Dr. Suneeta Reddy, who joins us to talk to us about how the quarter has been and what lies ahead for the company with very aggressive expansion plans lined up. Dr. Reddy, good morning. Thank you for taking the time out to talk to us. Apollo Hospitals once again has delivered and delivered well, a 15% increase in revenue, a nearly 60% rise in profitability. What were the key drivers that led to this strong growth, and do we expect, or can we expect rather, this trend to continue into the second half of this year?
So if you were to deconstruct the growth, healthcare services grew by 14%. And more importantly, the growth in volumes has really helped because we came in with revenue of 2,900 crores and EBITDA of 722 crores, which is a 16% improvement, 14% improvement in revenue, 14% improvement in EBITDA, and 16% improvement in PAT. So strong growth by healthcare services, driven by volumes. Our occupancy was at 73%, volume increase of 8%, tariff increase of 3%, and the balance was case mix. So therefore, strong volume growth coming from the healthcare services. If you were to look at Apollo HealthCo, which is our pharmacy and online business, there also we saw 17% growth with revenues of 2,282 crores. And in that, the offline pharmacy actually grew at 18% with a 7.6 margin. And together, Apollo HealthCo for the first time delivered a profit of 19 crores. And this delta has been reflected in our profits. So consolidated revenues at 5,595 crores and profits at 379 crores, which is a 60% improvement in profits. So driven by strong performance in healthcare services, pharmacy, online, offline, as well as Apollo Health and Lifestyle, where diagnostics grew by 10% and contributed to a 41 crore EBITDA margin. 41 crores of EBITDA.
Dr. Reddy, let's talk about volumes for a minute because you alluded to that. Is there an element of seasonality here? What is the sort of expectation that you've set out internally in terms of volume growth going ahead? And this is across the board, across hospitals.
No, here it's, yes, there was some medical admissions, but last quarter we were at 10% volume growth, and now we're at 8%. I'm optimistic that, the whole network is firing, and therefore we should see continued growth in volumes.
Right. Ma'am, also margins have expanded to 14.6, right? How have you managed to pull that up? Is it largely to do with Apollo HealthCo, or are there other factors that have contributed to the expansion in margins? And would you be able to sustain at these margins going ahead? And please free to tell me if there is a good possibility of you outpacing that.
I think looking forward, we should expect stable margins and yes, definitely improvement on a consolidated basis. Healthcare services was at 24.6, which is a very healthy margin. Healthcare, Apollo Health and Lifestyle was delivered a 30% improvement in EBITDA, which actually benefited the whole, consolidated, and so did Apollo Health. So their Apollo HealthCo was at 2.3 EBITDA margin, but the pharmacies by themselves were at 7.6. So let me say there's been a healthy margin growth on a consolidated basis, 164 basis points improvement in margin. And going forward, we should only see that improve.
Dr. Reddy, the segment's PAT has also seen a 16% YOY increase, right? Now, you want to try and explain to me what has helped drive this profitability and enhance performance. And like you indicated in your first question, you are firing from all cylinders. So you want to elaborate on that for me?
Yes, I'm quite confident that this is something that is sustainable.
Right. That, of course, is the big positive on the numbers. Ma'am, stay with us. But Neeraj, you want to come on this one? This is interesting because, Dr. Reddy has delivered more than she had committed in the previous quarter. They were very clear that they would swing to a profit on Apollo HealthCo. There was some institutional brokerages that weren't too confident that would happen. but she successfully managed to turn that around. She's managed to successfully tell us that Apollo 24/7 digital also will look good. But actually, yeah, Dr. Reddy.
Okay. No, mind. No. Before I come in, might as well you go.
Yeah,
to
I'll
her,
just,
yes.
okay, Dr. Reddy, we were just discussing of how the turnaround is very obvious here, right? And there's been a very clear improvement in occupancies. You want to know what the numbers we have are at a cluster level. What I want to understand from you is at a group level, at a hospital level, where does occupancy currently stand at?
So if you look at ARPOB at a cluster level, metro hospitals are actually 10% higher. So I'm sorry, 20% higher. So if you were to look at Chennai, Delhi, Hyderabad, you will see that ARPOB is at 70,000, whereas we are reporting 59,111 rupees. And how do we look at growth going from here? I think it will be a combination of case mix. There has been a 3% tariff increase that has aided this growth in ARPOB.
Apollo Health Co, like we've of course talked about, has reported a swing in terms of revenues and EBITDA positive as well. Margins are still soft, 2.28%, but still coming from a negative place, this looks great. Into the next 2 quarters and into the next financial year, how much more margin contribution or margin improvement are you expecting from Apollo Health Co?
Well, I think that a very realistic level for offline pharmacies, they have been, the mature ones are at 9 to 10% margins. So you can expect to see that the company wide, they should be able to be at 7.6%. And that's the short term margin, but long term, their plans are definitely to go into 10%.
The 24/7 digital platform, when we talked last quarter, you said you see that also turning or breaking even in a few quarters. From where we are right now, and I know this is always, obviously we're crystal ball gazing from where we stand, do you feel like you could see a break even in the next couple of quarters, or are we looking at more of a FY26 sort of timeline? I know it's a significant business and the growth will only come in once you break even and improve your margins and sales on that.
I'd love to know if indeed those timelines hold true, Samina. And we'll wrap up this interview, of course, now, but I think that is the most important thing to know from a timeline perspective.
Yeah. Ma'am, you want to tell us a couple of quarters out, 5, 6 quarters out? The last time we spoke, you said you were out by 6, 7 quarters.
Well, I think, in the year 26 by 27, they should break even in the first quarter of that year or the last quarter of 25-26. They are on track, and while they are, people are focused on pharmacy delivery, they have several other revenue streams that will benefit the company and therefore add to profitability.